Busy times, folks. So much going on out there in the market. We got some things to react to on the reaction channel here today. First off, I want to talk about some of the best opportunities I see in the stock market from a few different perspectives right at the top of this video. So we'll get into that, okay? From there, I recorded the full segment with Tom Lee, some very interesting commentary. This just came out about 2 hours ago. Tom Lee went on CNBC, so I want to go ahead and react to the whole first kind of like 7-8 minutes of the conversation. Tom Lee talks about what's going on with the Fed, what that means for the market moving forward, Nvidia, all those sorts of things. So I think that should be a fun one to react to. Then, since we're going to react to Mr. Bullish Tom Lee, I thought let's go a little bearish here. So I want to listen to this woman speak about why stocks are overvalued and market optimism may be misplaced. I think that should be an interesting video to react to. And then we'll talk a little bit about consumer confidence and what this means for the market moving forward, the economy, those sorts of things. So yeah, busy video, got a lot to get into. One thing only I need from you guys, please just smash the thumbs up button. That's all I need from you guys. If you could just do that for me, that means everything, okay? And additionally, if you want to be subscribed here to the channel, you can certainly subscribe. I think we're at 106,000 subscribers here on the channel now, on the reaction channel. Either 106,000 or 107,000. Appreciate y'all for being here. And just so you know, we're about 5 days away from the Labor Day sale. That's going to be on September 1st. That is going to be for the highest end Patreon tier. In my Patreon, that tier is usually $125 a month. It will be $49 a month for that particular deal. So if you want access to that, that's going to be access to my Becoming Master of the Stock Market course. Also for that Patreon Discord chat, as well as to see the stocks I'm buying and selling each week and how I build a portfolio with screenshots, okay? So you guys, might get a lot of value out of that. This is not my private stock group, just so everybody's aware. This is, the highest end Patreon tier I have. So if you want to receive the deal via email, you can click the pinned comment, put that in, or the phone number, and we'll be able to send that over to you. And then other than that, yeah, man, that's going to be awesome. So that's in a few days from now, okay? Alrighty, so what are some of the best opportunities I see in the market? Well, here's the deal. I posted this on my X page here today. If you don't follow me on X, you can always go to the description area. I always have a link down there. Okay, Holy Smokus is my, whatever you call it, username or whatever on X. Okay, so I put this. I said 2 stocks that are still an easy money buy in this market are drama free. I view those as Google and Adobe. Now, when I say drama free, what do I mean about that? Right? Because Google and Adobe both have plenty of drama around them in terms of a lot of question marks around Google from the Wall Streeters over the last year. Oh, AI, is it going to disrupt them? It's going to completely destroy Google, all these sorts of things, right? And I discussed this on the main channel last night, in regards to Google. I've just discussed it for the last few months, right? Google's a very well-diversified business. They're set up very well for AI opportunity as well. And they're an absolute ATM machine of, one of the best companies in the world. Like, if you look at their income statement, balance sheet, cash flow, you certainly put them in the top 5 in the world. It's just a question of where are they at in that top 5, essentially. So, but there's a lot of question marks. Adobe, is another one people worry about. Like, is AI going to disrupt them? I look at Adobe and I'm like, maybe in some ways, but AI is also going to benefit Adobe long-term in quite substantial ways as well, right? So Adobe, plenty of drama around it in terms of like worries, but not in terms of the numbers, not in terms of the actual business fundamentals. The commentary, there's plenty of drama. But when I say a stock's drama-free, I'm talking about the fundamentals of business. At the end of the day, look at Google's numbers quarter in and quarter out. They're drama-free. Same thing with Adobe. All these people talk, quarter after quarter, year after year about AI and what it could mean to Google and Adobe and all this talk and chatter. That just is what it is. When you look at the fundamentals of Google, when you look at the fundamentals of Adobe, we see no signs of drama. So when I say a stock is drama-free, that's what I mean. I mean the fundamentals of the company, not the commentary from people out there, right? The fundamentals are, like the numbers are proof. Like, look at the numbers. Look at the income statement of Adobe. Look at the income statement of Google. Look at the balance sheet of those companies. Look at the cash flow statement. And you'll be like, yeah, it's pretty drama-free here. Like, they just put up their numbers. Look at the guidance of those companies, right? Now, I also said my 2 favorite stocks no one talks about are Cake and Celsius, right? Cake and Celsius, Celsius was a stock that was heavily talked about probably, I would say 2 years ago. Everybody used to talk about Celsius like crazy, even a year and a half ago. But the Celsius chatter after the stock crashed, man, that went down to about nothing, right? And there I was starting all of a sudden talk about Celsius after it crashed and, great opportunity I saw in the company and those sorts of things, right? And now You know, we're seeing like it has a ton of momentum, but the hype and talk that Celsius had, you know, a couple of years ago, it's not there anymore. So it's coming back a little bit, but it's still very diminished. Cake, I don't know anybody that talks about Cake other than me. Like, and it's an incredible stock. It's performing tremendous. It just paid me out some very nice dividends, right? In all my different portfolios, I did something fun with my 10-year-old here today. I showed him, you know, the dividend income I received in the public account and in my private portfolios as well. And then, you know, he said something about, like the Menendez brothers were kind of his hero. No, I'm just kidding. Well, that took a turn, okay? No, but that really motivated him. I was showing the dividend income, and he's like, well, you get that every 3 months. And then, you know, he was very motivated. He wanted to buy some dividend stocks as well. So he ended up, he bought 3 shares of Cake here today, okay? He bought himself three cake shares, you know, so I think his net worth, is just over $1,000 now at this point in time, so good for him. But the moral of the story is here, you know, Cake's a great opportunity. It's a great dividend payer. It's a great value stock. You're getting it at a great deal. And it has the next 10 years of growth ahead of it because it has so many successful restaurant concepts that are going to be able to expand all over the United States of America. And the Cheesecake Factory continues to just be an ATM machine. So I love that stock. No one talks about it, but man, it gives you money. It gives you gains, right? It's been an incredible gainer. And yeah, $868 in the public account. It just paid me out in dividends, paid me out a bunch in other portfolios as well. I love it. My 2 favorite stocks that are actually popular stocks in this market are AMD and SoFi, right? AMD and SoFi, definitely very popular stocks. Those are stocks that are talked about by a lot of people, you know, whether it's on YouTube, whether it's on X, you know, AMD and SoFi are definitely popular, but I still love AMD here. I know the stock has gone up a tremendous amount since those April lows. The April lows for AMD was somewhere in the 70s. Like, it was insane, right? And now the stock's over doubled up since that time. But, you know, when it comes to AMD, like the next, like, oh my gosh, like the growth rates of this company for the next many years. Let me see if I have my numbers saved for AMD here. Let me take a peek here. So what we're on 1000xstocks.com right now. Oh, I didn't save my AMD numbers yet. Dang it. I need to save some AMD numbers here. I have Adobe, Amazon, Apple, Duolingo, Google, and Palantir saved, but I don't have AMD yet. Ugh. I need to get my AMD numbers in here and saved so I can show you guys those in the future, right? But the moral of the story is here in regards to AMD, like growth for days and days and days, right? Years and years and years. SoFi is another absolute growth machine. And the interesting thing about SoFi is we're just trying to figure out, like, what is the sustainable revenue growth for SoFi? Because it's kind of been all over the place. We were in the 20s, now we're in the 40s. And even as a bull on SoFi, I'm trying to figure out, like, is this a company that could sustainably grow revenue 30% plus clip for the next many years? I'm like, maybe they could. Now, the thing that no one talks about with SoFi, I think is really interesting in regards to the stock, is what happens as SoFi starts to build out their cash flows. Right, this business really starts to throw off profits, incredible profits, and we know they're kind of going more asset light with this business model, which should be even more incredible for margins and profitability. The question I don't think anybody asks is, what is SoFi going to do with all this money? They should start to stack money, right? Here's what they could do. They could do big share repurchases down the road, right? As those cash flows build out, their net income skyrockets over the next number of years. They could use that and buy back tons of shares, which will help the EPS in obviously a very substantial way. You know what else they could do? And this is something that happens in the financial and banking space all the time. But I think because SoFi has been a smaller company, because they weren't in the best financial situation for a long time, I think a lot of people don't even consider this other option. By the way, dividend, this isn't, where I'm going here is not dividend, but I think it's just worth mentioning. Dividends for SoFi, I don't see that coming anytime soon. Maybe Anthony Noto and the board has a different opinion on them. I don't really foresee them doing dividends anytime soon. The company's too fast to growth. Dividends someday. But I think that's probably 2030s. But we'll see, never know. Maybe they change their mind, but I think that's probably a 2030 story. But the thing I think that SoFi could end up doing once this profitability skyrockets and the cash flow starts to skyrocket and the money starts to stack, and happens all the time in the banking space and fintech, but no one's thinking about it with SoFi yet. You know what they might do? They might start buying out other financial institutions. No, some won't make sense for them. Some will. Because here's the thing. SoFi could start acquiring other assets from other financial institutions, right? And customer bases. And with those customer bases, they can become, they can obviously promote SoFi easier to them, right? And that can obviously help revenue growth in quite a way, and in those cash flows and earnings per share as well. Because many times, if you're going to buy another financial institution of some kind, make a deal like that, even if it's a smaller player, many times, and here's the thing with SoFi, like they could acquire, let's say, a financial institution, but then they could maybe sell off the loans to somebody else to keep SoFi light. So maybe they acquire the customer base, right? But maybe then they sell off the loans of, let's say they acquire, the 40th biggest bank, okay? Like, no one talks about them, but it's a little bank. They got a lot of valuable customers at that bank, okay? So they go ahead and acquire them. And it's a bank that, JP Morgan or Wells Fargo or Bank of America couldn't really do because, the government wouldn't let it through. But SoFi, they'll be like, this is fine. So they could acquire that, go ahead and essentially get that customer base, right? And then sell off the loan portion of the business to somebody else, have them take the risk on that, and you remain asset light. So, people haven't even really started to discuss that in regards to SoFi yet, but I'm just trying to think about where SoFi's at 2, 3, 4, 5 years from now, right? And I'm like, that's a potential there. All right, Tom Lee.
It's good to see you.
Great to see you, Scott.
Nvidia looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I know investors are really anxious, and Nvidia has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think Nvidia still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? From Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
It's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's bigger upside in the owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think
this is just ridiculous. Okay, listen. Some of these Wall Streeters believe if Nvidia stock stops going up, the whole market's doomed. It's just ridiculous. It's just preposterous. Okay, the market runs through these big name companies all the time, right? If it's not Nvidia, it was Apple, right? And then Apple started to falter. We know growth rates are not what they used to be years ago. And what happened to the market? It went up and up and up and up, right? And a new company, a new hot thing, took Apple's place as the biggest company in the world. And his name is Nvidia. So Nvidia, eventually, their numbers will start to slow substantially. The stock will stop going up in a meaningful way, right? Doesn't mean it will stop going up at all, but the stock could go through a reset and then like slowly climb again. But the thing you got to understand about Nvidia after 2025 is a super exciting investment time is done in Nvidia after 2025. Like 2025 and before was the super exciting time to be an Nvidia investor. That was when it was just like, they're doing this, they're doing that, they're increasing revenue so dramatically and whatnot. That does not mean Nvidia is done as a company after 2025. That does not mean Nvidia's stock price will never go up after 2025. Because at the end of the day, like Nvidia can keep increasing their business. But now what's happening with Nvidia is they're going to start in 2026 and beyond. The law of large numbers is going to start to catch up with them in a substantial way, like it catches up with everybody, like it caught up with Apple over time, right? It's really hard for Apple to increase their business dramatically now. Like as you become bigger and bigger, it's just what happens. It's difficult, man. You even look at AWS. AWS still posts very impressive revenue growth in the AWS segment of Amazon, but the business has become so big now, the numbers are so massive that people look at it and are like, 19% or 16% or something like that. If AWS posts 16 or 19% growth, like that's still an impressive number, but it doesn't look that impressive versus much smaller companies that might be growing, like Microsoft and some of their business that competes against AWS or Google. And they're like, oh man, those companies are growing at like 20 something percent or 30%. AWS is a lot bigger business, okay? So, yeah. So anyways, that's just something important to keep in mind there.
Yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
They're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally,
yes.
Right? Industrials,
correct.
The biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I think what we're even this quarter, right? The numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO. These are all good signs to me that you want to be overweight financials.
Does the calendar matter for the market, right? September is historically a bad month. We like to look at the seasonals. Some people do to determine, what they want to do. Do you follow that much?
Yeah, I care about the seasonals because that we know becomes the base case for investors. Just like August was a month everybody was wary. So then what you have to build in September is, are there things that can be positive surprises for markets? And to me, that's going to be the Fed.
A positive surprise?
A
surprise at this point?
Okay, a positive versus the base case. Because if you look at all the Septembers in the past, this time is a Fed on hold that's finally cutting. So that makes this September better. And then the idea the ISMs could recover, which really doesn't usually happen in the fourth quarter, but it could finally happen. We've had 29 months of the ISM below 50. So I think that we could have a better than expected September, October, November, December because of the Fed cutting and now the ISM turning.
Yeah, but not just ISM, right? We got to watch jobs.
Whoa, he's going, full September. He went September, October, November, December, right? What's my feeling on that? Like, would I be shocked if we had a really good September? I wouldn't be surprised. If people are confident the Fed's going to cut, right, there could be that optimism in the market. If Nvidia does well, there could be that optimism in the market around the whole semiconductor space, which kind of helps just kind of give a little short-term relief out there, right? We already know earnings were good. We know guidance was pretty good from a lot of the companies that matter the most to the stock market. You could continue to see small cap momentum, especially if people become more confident that inflation is not an issue and the Fed's starting their next lowering cycle. with that being said, like 2018 scenario is still out there. Like, we could top first week of, right around the end of September, beginning of October, and still have a rough fall. Like, there's always that factor, especially if you get a strong September. And I think that's just something people got to get mentally prepared for. Not as guaranteed to happen, but if it's a 2018 like year, we'll have a rough fall, and it will come out of nowhere, and no one will really expect it. Just when everybody's like ready to go bullish and like, oh, rate cuts, this is great, we're going up, baby, right? And it's like, dude, we've been going up. Where you been at for like 3 years now? Like, you're a little late to the game, but and you could have a big pullback in the fall. And then that opens up some opportunities for some, really good buys, obviously, in the winter time. But we'll see. Like, maybe that doesn't happen. Maybe Tom Lee's just, bullish, up, in a way it happens. But I feel like the market has been a little too not taking any risks seriously. And it just feels like I always think about the market in terms of setting people up. And you had a good case to be made that the market should go lower, if anything, since April, because there's been a lot of still drama and a lot of negative things, a lot of negative sentiment surveys and all this stuff. But yet it's gone up and up and up, right? And then now I feel like you're going to have a strong case to be made that the market should go higher, right? Oh, Fed's cutting, like interest rates going lower, boom. And then you actually get the Fed to cut. And then maybe after that, the market makes a short-term top. And then we actually have a several-month down cycle where it just kind of goes lower, lower, and people think it's going to come back. And then it goes lower, and then like it's going to come back. And then we don't bottom until like January. Like that's a potential, just... all things, when you can't make your investment decisions just based upon like this might happen or like might not happen. You got to consistently buy in the market, and if you want to hold a little cash, take some profits in September. Fair play, right? That's fair play. So
again, and we have to look at the inflation prints again.
That's right. Yeah, and that's where we have to rely on the Fed to make good decisions, and Fed independence being critical, because we want the Fed to do what's right for the economy.
Some say Fed independence is already shot. And today, or last night's news of the president moving to fire the governor, Lisa Cook, is the nail in the coffin of that conversation, at least for now.
I hope that's not the case, in the sense that...
Not the case of what? That he actually fires her, or that it's marks the official end of Fed independence?
Both, actually, Scott, because I think that there's a window for this to have a dignified ending or outcome for Cook, and I don't know if that means people take a step back and reverse what they've done, or if that means Cook is allowed to resign. I think it is important for that to be a process the market accepts, because you're right. I think the market would get very nervous about Fed independence being questioned.
Okay, on that note, let's bring in Steve Leisman. He joins us on the phone. Steve, we have a statement.
Yeah, there's one other part, because they just kind of talk about the Fed here, but there's one other part I want you guys to hear. Tom Lee makes a big statement toward the end here. Very big statement that I think is worth hearing. And this is in regards to Nvidia and what he expects Nvidia's stock price to do.
Revenues back into the fundamental story for Nvidia.
On their earnings, he makes a
Tom,
big
you want to just put a bow on that, reacting to that?
Ready?
Yeah, I might say that investors have been patterned and bracing for Nvidia to sell off after they report tomorrow. And yet, I think the visibility and I think the conviction on AI is actually stronger. So I think there's a chance Nvidia rises dramatically after they report Wednesday after close.
Okay, that's a bold statement.
Dramatically after they report. He thinks Nvidia is going to go up dramatically. That's a big statement, Tom Lee, right? I don't think it would be the worst thing, if Jensen came out and said, we're still going to grow revenue substantially in 26. We could grow it. He could give it just a big range. He could say we're going to grow revenues anywhere between probably 30 and 50% in 2026 based upon how our order flow is looking. Like, if Nvidia really has this big of a backlog, if they're really working with customers this close, that's not crazy to make that assumption, when you're basically going to be, it's almost September now at this point in time. Like, they should be able to see their chip orders 6-12 months easily into the future, if not longer than that, right, from their customers. So if they really feel confident in their business, throw out a number there tomorrow. Say, you know what? I mean, next year's looking great. I wouldn't be surprised. Don't hold us to this. This isn't an official guide, but I wouldn't be surprised if we grow revenue 30 to 50% next year. That would be so much, like, because I think analysts are at 38% for next year, right? It would just give so much confidence to just hear Jensen come out and say, next year, yeah, it's not going to be as great a growth rates as it's been, but still a ridiculously huge number. Oh my gosh, that would give so much confidence. He could even do another range, like somewhere between 25 and 40%, or 25 and 45%. Oh my gosh. Could you see Nvidia go 200 if that happened? I wouldn't be surprised, because it would just take such a weight off of Nvidia shareholders, because then they know what they're getting next year. They're like, oh, we're getting somewhere between 25 and 45% revenue growth, right? And I feel comfortable with that. And we'll probably come in to the midpoint or the high end of that. And they're like, boom. And like I said, Nvidia should have the sort of clarity that they can make a comment like that, right? And he could say, you could easily say, this is not our official guidance yet. We'll come out with our official guide, but just based upon what I'm seeing with order patterns, what we have already coming in the books, kind of projecting out a little bit, this is what I think we'll probably. Come on, man. You know what I mean? Like in Nvidia 200 then, if that were to happen. Because it would just, once again, it's not because it'd be such a great surprise, because a lot of people expect Nvidia to grow somewhere in there next year. It would just be like Jensen coming out with that level of confidence, driving 1,000,000 miles an hour. I'm going to put a speed bump in front of my house. Let's go.
Thank you,
You sound like you're a little cautious kind of on everything right now in this.
And of course it was like a BMW 3 Series.
Market. You said, and by the way, it's hard to find people who are cautious now. It feels like so many people are on the same side of the boat. What
Those need to chill sometimes, okay? Just chill sometimes.
What has you so cautious?
Scott, I'm a rock climber, and I spend a lot of time in Tahoe. And when I go up one pitch, I get nervous. If I go up 2 pitches, I get a little bit more nervous. As I go higher and higher, the more I really care about making sure my rope's intact. I know where my belayer is. I got eyes on all my gear. And this market has come up a lot this year.
I mean, to be fair, I'm just going to break this down mathematically. As you go up higher when you're on one of those climbs, you shouldn't get more nervous, to be honest, because once you get 100 feet or so, you're dead. If something does go wrong and you fall, you're dead. So, you know what I mean? It doesn't matter if you fall from 200 feet or from 500 feet. You're dead either way. There's no making it in that situation, okay? If it was 10 feet or 20 feet or 30 feet, then I get it. But, once you get up there a little bit, if something goes wrong, you're done ski.
But it's interesting because people are saying the markets are coming up a lot this year, but it's not really the market.
That's right.
It's just a couple of stocks.
Well, it's a little bit broader than that, in fairness. And there seems to be good reason. Earnings were way better than expected, so the multiple doesn't appear as egregious as some maybe thought it was. The tariffs don't seem to be causing the kind of inflation that the worst fears were centered around.
Yeah,
and despite the noise around the Fed, they all but are telling you they're going to cut rates soon.
Powell opened the door Friday, right? I think that his tone is a little bit more open to it. But he's got, as our CEO said, he's got a little bit of a tug of war. You've got job numbers which are not terrible, but not as good as we'd like. Mm-hmm. And the inflationary numbers, if you look at the consumer confidence index that came out this morning, we have inflation as an estimate at 6.2 increase over the next year. So it looks like everybody thinks inflation will go up because tariffs are just now starting to show some effects.
You think stocks are overvalued, just straight up?
I think stocks are overvalued straight up. But again, looking at the index and the P on an index is really tough when it's just a handful of names. If you look at most of the S&P 500, earnings fell 5.2% year over year. It's not up. Again, technology has carried this market, and it's becoming a crowded trade. I get very nervous when I get into, a taxi car in New York, and everyone's saying buy Palantir, buy Nvidia, buy 2 stocks, right? There are more stocks to the market that are important to watch.
Do you think there are more stocks to the
Who
market?
gets into a taxi in New York City nowadays? I was just in New York for over a week. Come on, man. Taxi? First off, take the subway everywhere. It's so much cheaper. I got a hack on that subway, by the way. I can't tell you about it, though.
That are worthy of being bought today? Or are you just negative across the board?
I do. Look, healthcare is up not even 1% this year, right? And actually, EPS on the healthcare stocks increased nicely year over year. But there has been no participation in healthcare stocks at all. And if the AI boom is real, it should help sectors like healthcare quite a lot.
You think the Fed's going to cut rates in September? And if you answer that question yes, then presumably you believe in all of those stocks in an area of the market you say hasn't participated actually joining the party.
Yes, look, I mean, I've been preaching go with an equal weight index all year over a market cap weighted index, because that market cap index has gotten, again, really, really crowded on those trades. So I do like the equal weight better than the market cap weighting index. Where I get nervous is that I do think they're going to cut rates in September. I think we get 25 basis points, not 50. The markets as of Friday were pricing in 100 basis points until, call it June of next year. I'm just not sure we get that much. I think there still could be, again, that tug of war between inflation and jobs. And the Fed has a dual mandate they have to answer, and it's very, very difficult. You also have to remember in 2021, everyone's accusing Powell of getting it wrong. We were behind the curve on inflation. So if they get behind again, inflation starts taking off, and they have the same catch-up, we saw what happened in 2022.
But I mean, ultimately, they're going to have to make the best guess that they can, and they seem to be leaning in the direction that inflation is going to cause this one-time price increase. You don't buy that?
So if you're looking for the epic market crash, okay, if you're looking for the epic market crash, how does it happen? Here's how the epic market crash happens. You get inflation to take off like crazy, let's say in 26, okay? And it's going to be devastating to the consumer likely, especially if inflation in goods and services and things like that is basically outpacing wages going up. So, the consumer can't really deal with another wave of inflation. We've been able to make it through that first wave of inflation without causing some sort of, massive recession or something like that. The consumer will not be able to weather another major inflation storm. That will hit hard. That would hit probably, like, if inflation goes wild in 26, it would hit the consumer hard, likely more toward 27, right? Because there's like a lag on this whole how everything works, right? And so if that happens, then we could talk about the big market crash, because the consumer wouldn't be able to take it. The Fed would not be able to likely raise interest rates at that particular time, because the economy would be going into a massive recession at that time. And then they would have to be cutting rates down to zero. But while inflation's still high and the economy's ugly, and that would be a major stagflation recession, like what everybody's feared for the last several years, like you would actually get it. So that's how you get the big crash. Everybody always wants how you get that big one, man. That 30-50% downside for all the stock market indexes. That's how you get it. That's how you get it. Is it a possibility? Sure. It's certainly no guarantee, though, but it is a possibility, and it is a risk factor I think everybody should consider. If you get inflation go out of control, way outpace wages in 26, it'll get ugly in 27. It'll make 2022 look like child's play. But does that happen? That's a big question, right? And we gotta wait to see the numbers as they come out over the next year and a half.
First of all, I don't see how 25 basis point makes that much of a difference.
Well, it's the start.
It's the start.
It's not the end.
It's the start. That's
your fear sounds like, though, it might be the end. Like, for a while, they cut 25, and then they're like, well, let's wait and see.
I think they've got to wait and see. I think we might get 50 basis points this year, but then it's going to be a wait and see story that has to play out. And again, going back to how many companies beat earnings this quarter, remember, 85% of companies beat in Q3 2021. And again, 2022, we saw a 27% peak to trough decline in the S&P.
Now, do remember here, folks, something, if you want to be bullish on the economy, the consumer, things like that in 26, do remember all the big, beautiful bill, right? We're going to start to see the positive effects of that in 26. So that's just something to keep in mind there. A lot of the tax changes start to go through in 26 and will start affecting the consumer positively in some businesses and things like that, right? Certain things might be negatively affected, but overall, I would say it's much more of a positive stimulus type effect that will hit in 26 as the year goes on. So that's just something to keep in mind. But we got to get to 26, right? So anyways, just something to keep in mind. And you could say, well, if people are in a little better shape, that might increase the chances of inflation going out of control.
Maybe. This is August read on consumer confidence from the conference board. 97.4 is the headline, better than expected. However, not sequentially higher than the big revision. Last month, 97.2 now becomes 98.7. And if we look at the present situation, 131.2, that follows 132.8. And finally, expectations, 74.8. and it is following an upward revised 76.0. So not one is sequentially higher than our final July reads. Now on Richmond Fed, on the manufacturing side, -7. That's a little better. We're expecting -11. What's interesting here is that is the best read since it was -6 in March of this year, comping to a negative number, never good. But if we go to the business side, the service side, a little bit better, a positive number, up 6. That follows -8. Up 6 would be the best. Well, just since June, we're positive 14. If we look at the market, right now we're at 369 in a 2-year. That's where the market was before the 830 data, and before this data hasn't really moved much. It's down 4 basis points. 8-10-year at 428. Similar. It's really been hovering right at that level. We do have auctions at 1 Eastern. Today it'll be a 2-year note, 69 billion. Tomorrow, 5 years at 70 billion, followed by Thursday, 44 billion, 7 years. Mike Santoli, back to you.
Rick, thank you very much.
So confidence, what does that mean overall for the market? Usually pretty good things. You know, if there's more confidence from the average consumer out there, that, you know, it's not always guaranteed, but it just means there's a higher probability, you know, spending could increase, things like that, right? Which gives into the data and gives people more confidence in the markets. And so, you know, one of the things that's been very uncomfortable in the market, I think, throughout this nearly 3-year rally, right? And obviously we've had pullbacks and the whole April situation, blah, blah, blah. But one of the holdbacks, I think, from people feeling more bullish over the past 3 years has been how bad consumer confidence has been along the road. If we can see consumer confidence pick up, you know, I think that could be very bullish for the economy. But I do worry that down the road, inflation, right? Between tariffs, then if we get the consumer in a lot better spot and they start spending aggressively, and then companies feel even more emboldened to raise the price of goods and services, and suddenly you're in, you know, a little spiral there, and that could cause issues down the road. But for the next 6 to 12 months, it could actually mean good things. So, you know, these are all factors to kind of weigh in, right? But you got to have a steady process, and I teach a lot of that in my Becoming Master of Stock Market course. If you want access to that, that will be pinned comment down there. Click on that, put in your name, and if you want to receive the deal via email or via phone number, we can send over the deal when it drops on September 1st. That is for my highest end Patreon tier, $49 a month instead of $125 like it usually is. And that's not just a 1-month teaser. Some people ask, like, is that just for the first month and then it goes to $125? Nope. It stays at $49. So, you know, I like to take care of people like that, you know, but I know a lot of companies, they're like, oh yeah, $49 for the first month, and then after that you're paying $125. No, we keep it at $49. Okay. All right, guys, appreciate you. Much love as always, and have a great day.